It's Mr. Biggs, and today's lesson is the pincher play. It's very possible that you've probably heard about the pincher or the pincher play, but if you don't know how to read charts or you don't understand technical analysis, you probably have no idea really what it is, what to look for, how to play it, resistance points. So I thought I'd give you a quick breakdown. This might not be the true definition of what the pincher play is. This is just my interpretation of the pincher and what I look for and how I play it. So this is just all my opinion. Okay, so the first thing we need is, to even get the pincher started off, we need two things. We need the PPO, which is this blue line here, and we need the ADX, which is this blue line down here. So you'll see that they've sort of converging up towards each other, and when they get close together like this, they get tight. They call that pinch. So right here, they're starting to pinch together. Now what we look for is the separation. So when the PPO here, this blue line, starts to turn up, the ADX starts to turn down, that's what signals that the pincher play has started. So they've been converging in nicely, they're getting close, they're pinching, and then we look for the separation. Now, you don't want to jump in on that alone. There's several things I look at. I'll just draw a vertical line here of actually when they separate, and I'll show you what I mean. The first thing I look for is, you'll notice this black line here. It's actually an overlay on the PPO. It's another indicator that's overlaid on top of the PPO indicator. And in this case, it's the full stow 733. So you'll notice that before the pinch happens, this full stow overlay will meet with the PPO. And even before the PPO turns up and separates, usually this stow overlay will. So that's another good or early warning signal that the pincher is going to start. And actually, if you look down at the chart, if you see down here, it works on tops too. So you'll see here that they met up here, and then when the stow started to turn down and separate from the PPO, you can notice what happened to the stock price. It just started to crumble, and then it's continued down until now when they met again down here at the bottom. And now they've met and the stow has started to separate, and now since the stow is turning up, you'll notice that the price is now going up. And that should be, if you want to play this as a midterm trade, you could probably just, that would probably be a very important thing you'd want to watch, is this stow overlay on the PPO. So you can just follow the stow as it goes across the top. You wait for PPO to come up, and then when they get back up to this point and they separate, they join together and they separate again, that would be probably when this run is over. Like, it's going to go up, it's going to go down, but the run will probably last until they meet again up the top, and then the stow separates, starts to turn down, and that will be your signal to sell if you're a long-term swing trader or midterm trader or whatever you want to call yourself. Okay, so anyway, back to the pincher play. So we have them converging, we have them moving apart, we have this full stow overlay popping up, separating away from the PPO. And then the next thing I want to look at is this green line here, this green line, it's just plus DI. I'm not going to explain what any of these indicators mean. I'll explain all these in different videos, but this is basically a lesson on just the pincher play, and so I'm not going to go into any detail on what any of the indicators mean. Okay, so plus DI is this, we want to see a sharp uptick here. We want to see a sharp uptick from Trix 3-3, and we got both of them, and there's two other things we want for a confirmation that it's indeed a pincher play is ready to go and it's time to buy in. So we'll scroll down, and two other things we want to look at is, one is the RSI 2 and RSI 5. When the RSI, which is the relative strength index, is below 30, that's considered oversold. So the stock's obviously been in a huge downtrend, has been selling, and it finally gets to a point where, anyone that was going to sell, old retail, is gone, and the selling has subsided, and now new retail is coming in. It's looking at an attractive price for this stock for particular people, so they start buying, and now we're going to come up from oversold. So RSI coming up from that, up through that 30 line, is now coming up from oversold. I look at WM%R 14, which is also known as Willie, and when it gets below minus 80, that's in oversold territory. So at the same time that we have the pinch going on, we have a sharp uptick from plus DI, we have a sharp uptick from the Trix 3.3, and we also have RSI 2.5 and Willie coming up from oversold. So those, you could use those four things alone, and they would confirm that the pincher play has started and it's a good opportunity to buy in the stock. Now personally, I would also look at probably a 10 and a 60-minute chart. Now if you were to look at this stock on a 60-minute chart, you would maybe look for a cross of, I use two moving averages, EMA 5, which is this blue line, and EMA 13, which is this red line. So we know the pinch is getting close, we know it's about ready. I would maybe look at a 60-minute chart, and I would watch these two lines on the 60-minute. So when EMA 5, which is this blue line, crossed up through the red line on the 60-minute chart, that to me would also be a buy signal. And you actually might, like if I looked at this daily chart alone, even though I know I see these things starting to move up, it's still probably too risky for me. I would probably wait till the next day when I see the white candle forming, I see the price going up. You know, I might get in here at around say 125, 130. But if I was to use a 60-minute chart and I look for the cross of EMA 5 on EMA 13, I might actually be able to get in here, you know, maybe around 120, 118, something like that. So I would go to the minute charts once I've seen the setup was ready. Okay, so now you're in the stock. You want to look for key resistance points that might be potential sell targets. And on the pincher play, there's specific known resistance points. You're obviously going to have all the previous candles as resistance points, but for the pincher play alone, the first primary resistance, and it's where most pinchers fail and they'll stop going up, it's this green dotted line here. This is known as the middle Bollinger Band, and the middle Bollinger Band is actually equal to the 20-day simple moving average. So that would be your first resistance point for the pincher play. So the pincher started and it poked up right here. You see it tried to get up through the middle Bollinger Band. It couldn't. It popped back down. We had a nice hammer candle, and then it made its second attempt and it blasted right up through that key resistance right here at the middle Bollinger. That's like a major resistance. So if you get through there, that's a good sign. Now your second key resistance point for a pincher play is going to be these pink dots. They're called SAR, the parabolic SAR. I'm not going to explain what it is, as I mentioned earlier, but you'll see that the candle came up, it hit the SAR, it knocked the SAR underneath the candle, so it blasted right through that second resistance point. So it took two tries to get through the first resistance, blasted right through the second, which was the SAR. And then the third main resistance for these pincher plays is this gold line, which is the EMA exponential moving average 50-day line. So this is going to be the one that's going to test Monday. It came pretty close Friday, but I think it's going to come up and it's going to hammer on that and try and get above that Monday. Now, if it gets above this gold line Monday, then that if it gets above the EMA 50, it becomes extremely bullish. So then it could sail right up here to test all these moving average resistances right here around, you know, 450 or even higher. So even though this has had a nice run from $1.15 to close at 260, you know, it could only be half done, because if it can get above this gold line, it has a very good chance of getting up here easily around 450 or higher. This is Mr. Biggs, and good luck trading.